Good day, ladies and gentlemen, and welcome to the show on this Friday, November the 25th, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's the thing. We're going to get right in there, and we're going to take a look at some of the stuff that's happening in the world, and then I'm going to talk about what one of the two big main drivers in this economic engine that is stalling out. Okay? That's important information. So let's get started. Let's open up the charts right here and take a look. First thing I want to talk about is in Berlin Airport. You know, this is a big, huge airport. European climate activists have now began to glue themselves to runways. I don't know what they're using, maybe super glue or something like that, you know, but I mean, the planes can't take off, and so what they're doing is they're shutting down the airports in certain areas, you know, so they're getting really, because this is big money involved here when they start shutting down plane flights. Here shows a protester with his hand glued to the tarmac at Berlin's Brandenburg Airport on Thursday evening. I guess I see the glue bottles there. That stuff, you know, if you try to pull the hand away, it kind of rip your skin right off. Okay, now what we're going to talk about is also in Europe. What's going on is the people are starting to use, a lot of the people are starting to use this stuff called laughing gas. And evidently they can go to the store and they can buy a canister of whipped cream or something like that. It comes in these canisters. See these empty canisters here where I guess they've sucked all the laughing gas out of them all across Europe. You know, they're sucking this laughing gas down. But it's like in whipped cream canisters. And evidently they squirt the whipped cream canister into a balloon and then they suck from the balloon. And it gives them some sort of a buzz or high or something. It says Glastonbury Music Festival attendees inhale nitrous oxide in a stone circle, and so there's 3 of them there, and they're sucking it up into their lungs. But it's very dangerous. It can lead to very big health problems. This teen here had a ruptured lung, and also a woman with a damaged spinal cord is paralyzed and in a wheelchair now from sucking all this laughing gas up. I guess they call it laughing gas because dentists used to use it, and people would be sitting in a chair, you know, they'd be sucking up this nitrous oxide, and they would just be like laughing their heads off, you know. Not exactly sure why. Anyway, taking a look today. Now here, I wanted to talk about these two big economic drivers, okay? And it's like my hands coming together and sliding against each other. One driver goes this way, one driver goes this way. It's like a steam engine. Chugga, 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 chugga down the track. Okay, you know, when the piston comes out and the steam comes behind the piston and pushes the train down the track. This is an economic driver. And it's this two-way thing between two of the biggest economies in the world. America being a huge consumer economy and creating credit so that they can buy all kinds of junk on places like eBay, Amazon, and have it shipped from China. Okay? This is massive. It's built companies like Amazon from the ground up. This tremendous amount of trades coming in from China, and America has to depend. How America pays for all of this is they have the world reserve currency and they just print it from nothing. They just basically, they don't really print it. What they do is loans coming from the banks create credit, and the credit creates the currency, and then they use the currency to buy all this garbage coming from China. Well, I shouldn't call it garbage, but I mean, you get the point. China's been selling to America's biggest trading partner back and forth with all this stuff. More stuff on these chips going back and forth from China. China gets rich. America gets more and more credit, and they get more and more debt. And debt is credit, and credit is money. All of a sudden, what happens when you start raising interest rates? Well, this is like a chug, 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 you know. They create all this new credit China starts to own some of this credit because of the trade. They have this trade surplus, and they're trading like crazy and sending goods over here, and this makes Chinese rich, and it makes the Americans deeper in debt, and this cycle just keeps been going on for years and years and years. Tremendous amount of goods and everything going back and forth, and now all of a sudden interest rates start to go up. Well, it makes it hard to borrow money. And especially an awful lot of things are pegged to the 10-year Treasury and its rate, which is also a part of the LIBOR rate, you know, is kind of tied into the U.S. 10-year Treasury rate. And this is basically the price of money. And so if money's cheap, it keeps this engine chugging along. And if China is in their factories working industriously, this helps to keep this chugging along. And if shipping lines are able to flow freely in the world, this helps all this keep chugging along. And if Americans are constantly getting new stimmy checks and constantly easy access to credit and money out there, it keeps it all chugging along. But what happens when interest rates go up? The central bank starts to get tight. They start raising interest rates. They start pulling that money out of the system through quantitative tightening. What happens is this borrowing starts to stop. This not only affects the U.S. housing market, but it also affects this economic engine between China and the United States. And then all of a sudden you get China wanting this zero COVID policy and locking down cities like Beijing, which is what they're doing right now. That's limiting how much stuff they're creating. You got these two things happening at once. It indicates a worldwide slowdown caused by this, a massive slowdown. And the problem with this is it tends to extend to other parts of the market and stuff. So one part of the market starts slowing down, this big economic engine, and everything starts slowing down. Like the guy that he might make widgets. He may have a factory where he makes widgets, sends the widgets abroad, you know. All of a sudden they don't need widgets anymore. Well, the next thing you know, his bank and everything that's connected to him starts to go downhill. He has to lay off employees, and then they can't buy something else. See, it spreads through the system like gangrene. It's a gigantic, enormous slowing of the system, grinding it to a stop. Because the system's so big, it takes a long time to grind to a stop. So we got the Fed over here, and they're just going gung-ho at raising rates and doing quantitative tightening. We're not going to see the knock-on effect of that for a few months down the line. And by the time they see what they're doing and how they're slowing everything down in the entire world system and putting us into a global recession, it's going to be too late. Then they're going to say, oh, what have we done? Oh, we got to fix this, the Fed. We put the world into a global recession, blah, blah, blah. Okay, we're going to reverse course. We're going to turn this around. But it's like having a ship on the Mississippi River. It's like if somebody was fool enough to try to go up the Mississippi River with one of those big long oil tankers. You know? And then all of a sudden they decide halfway up the Mississippi River where the water's not very deep to turn that thing around. I'm sorry, but you're not going to be able to turn this economy around that easy. We're going to run aground. It's just too big and it's too massive and it's got too much energy behind it. And they're going to put the world into a global recession, and then they're going to try to fix it with money. All that's going to do is trying to fix it with money is just going to make the money more worthless and send us spiraling in the opposite direction of hyperinflation. So this is why it's going to be a hyperinflationary depression. From the very start, I've said on my show that we're heading toward a hyperinflationary depression. The depression part is where people are losing jobs, people can't afford to pay for things, and it's just a crisis situation that's going to be pointing toward the people going into some sort of massive revolt in the end because they just can't afford to eat any longer. It's just a total mess. They are driving us toward a cliff. It's irresponsible where we're headed. The bridge is out, and instead of putting the brakes on, they're pushing the accelerator pedal and taking us all toward this emptiness where we're just going to fall off the bridge like Evel Knievel and crash down on the rocks down below. That's where we're headed. But all's not lost. It's just going to be a restructuring. It's going to have to be a restructuring of the world's entire financial system, ultimately. And whatever chaos comes from that is going to come from that. So that's why you got to prepare, because there probably will be, it could be massive chaos, I just don't know yet. Or it could be more moderate. At best case scenario, maybe we might just get off with something that resembles what happened during the Great Depression. You know, that might be a pretty good case scenario. Because I've talked to people who lived through the Great Depression. And yes, it was bad. But not everybody suffered completely. Some people did all right during the Great Depression, you know, and everything. And we didn't lose emergency. Police kept working right through the Great Depression, and civil order was maintained to a certain degree. And if we get off with a best case scenario, it might look something like the Great Depression. But a worst case scenario of all this, if everything falls to pieces in the worst way it could possibly can, maybe with a World War III or something like that, it could be dire. So this whole thing, when it comes together and coheses into something that's coming, and I can't tell you exactly what it's coming, I can't tell you exactly when it's starting, I just know we're headed toward it really fast. When it hits, it could be as light as something similar to the Great Depression, or a little bit worse than 2008. That's if we get off really easy. In the very worst case scenario, humanity goes extinct. In the very worst case of worst case scenarios, it's just something that we can't even survive because of the nuclear aspect to all of this. Because armies are fighting in places where they got live nuclear reactors, you know. And so you can't foretell the future exactly what's going to happen, but we're headed towards something that's not pretty. That much is absolutely clear. And also, it's unavoidable. The big question mark is how bad is the severity going to be? Just don't know yet until it plays out. So we're waiting, and we're preparing. People on my channel have listened to me for a while, you know, we're preparing. And what does that mean? That means putting away food supplies, water supplies, medical, as much as you can medical. I mean a medical kit, you know, like an emergency kit. Something similar to the way you prepare for a hurricane or a bad storm or an earthquake or something like that. A natural. And you know what? When you're prepared that way, you can get a natural disaster and you might have to use your preparation supplies. At least you got them. So it's not a waste. Like, if this thing doesn't come right away, because something else might come along and you might really need to take a look at all the people out there in my audience who were preparing before COVID hit. And they were preparing for a financial crisis that was coming. And then 2020 came, and some of these people had to use their preparation supplies during the COVID lockdowns, when they couldn't leave their home to go and everything was like, you couldn't buy any toilet paper. And it was a big help to a lot of people, the fact that they had those things at home ready to go. Things like toilet paper, you know. Anyway, let's move on, take a look. Silver price today, $21.34, is down 17 cents. We're going to take a look at gold today, and it's at $17.50. It's down $5.20. These are the two fundamental assets for all of history that have backed up all of these paper currencies out there that right now are not backed by gold and silver and who are basically worthless. But they're putting all their value in them, in these paper currencies, because the government says this is what is worth something. It's like on our say-so. So as long as the military is able to enforce that, they can continue to keep a certain amount of value behind these paper currencies that are actually worth nothing right now. But people are using them for trade, and it's all based on debt. So there we go, $17.50 for gold. Crypto today is it's been maintaining above 16,000. We're looking at Bitcoin at 16,498 and Ethereum at 1188. Taking a look at the Dow, it's up 169 points on this massive rally that has, like, okay, for this to have been maintained as a a bear market rally. Okay, see the bear market rally right here? It went up to 33,706. The next high should have been lower, and in fact it was. If we look here, it dropped and then it went up and it stopped right here. That's exactly where it should have stopped as a bull market rally, at 32,861. And that's when it started to fall. It fell down to 32,403. That's doing exactly what it should have been doing, and it should have continued to fall to make this next leg down in this bear market. But instead of continuing to fall, we see it's went up. It's went up like from 32,403 to 34,000, roughly 34,400. It's went up, and it shouldn't have went up. That's what shouldn't have happened. And what happened is it bypassed the top or the peak of the last rally, which is not what it's supposed to have done. And so right now, if we're still in a bear market rally right now, this is one heck of a strong bear market rally, and it's went up a little bit higher than it should have, and it'll fall back. But here's the thing, you know, what are they doing behind the scenes to have caused it to go from here at 32,403 to 34,367? What did they do right here? This is what I'm asking. Something happened to cause this right here, and I'm wondering what it was. Okay, so let's take a look at crude oil today at $78.23, and it's up 29 cents on the day, but it's still not back up to the $80 mark, where it has been above $80 for a long period of time, but it's not right now. And it's at 78.23. Let's take a look at the MOVE index at 136.20. And yeah, the MOVE index probably should be up around 140 or higher right now if it's going to continue marching on with its year-long pattern here. Let's take a look at bonds and rates today. We're seeing climbing yields. Now we're looking at a 10-year at 3.72 and a 30-year at 3.77. But now if we move down to like the US 2-year, it's like 4.49. You know, so it's quite a little bit higher if you take out a shorter term than the 10 or 30 year. And this is called an inversion of the yield curve. And it's a very sharp inversion we have right now, and it's a signal that things are not well in the financial system. Okay, 106.06 is the US dollar index. It was going up earlier today and now it's starting to peak and starting to come back down a little bit. This is only where it is because it's being compared against the euro mostly. The biggest other currency in this basket they compare the dollar against is the euro. There's a few others, just like the Swiss franc, Canadian dollar. I could name them. I think was it the yen, Japanese yen. There's a few others they compare it against to make up the basket of the US dollar index. Anyway, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Have a great afternoon. Oh, and happy Thanksgiving. Hope you guys enjoyed your turkey and stuff. We'll catch you guys in the next show. Bye-bye.